Okay, mate. Alright, mate, let's look here at HOT. Yeah, so basically the HOT, most altcoins, you know, I could probably look at any altcoin. Here's KSM. You know, very, very similar, right? You get the big drop, you get the small candle, getting alerts here, you get the small candle, and then the recovery should be next year in theory, right? It should be next year in theory that you know, we can start to get some sort of recovery. Now that's KSM there, of course. ADA USD, we'll go here, we'll go to the yearly. Now you can see down here what happened. Let's just delete that stuff. Look at this, look at the small candle here. Look at the small yearly candle right here. And from that small yearly candle, the buy is not really this year, the buy is at the start of next year. Now, we don't know if it's going to play out the exact same. I'm not saying it's bad to accumulate here. It's likely a good place to be accumulating right in here, right? If it goes to new lows, well, then that's a good place to be adding and building more of a position. You know, if you had bought ADA in the body of this candle, would you be disappointed? You know, probably not. But we of course we do not know if history is going to repeat or whatever. The safe way to be trading it is obviously to buy next year if we have a small dip down and flip green again. As soon as this flips green next year, that's also a load the boat situation. So if you had been averaging down and then you get more and then you get this situation here where you stop on the lows and start flipping green on a year, well, that's a place you want to be adding and loading the boat if you had missed the lows. Okay, so it's not really to worry if you're missing the lows yet, because this opportunity, it will come later. If this market is going to be truly bullish next year, and we're going to get a flip green on the year, and we may even get a stop hunt as well. So yes, it's good to average down now and build positions or whatever, because we are right down there, but there should still be opportunities next year when the move is about to make its run. Okay, so what I'm saying is you don't need to stress too much. Hopefully, now it's not always going to play out the same way. Personally, I like to have some exposure down on these levels. It may not be the perfect entry, but I like to have some exposure. And then if the market gives me the perfect structures, like for example, if we do take out these lows, look at this. Oh, bloody alerts. If we do take out these lows, sorry, well, then I'll be looking to add down here, and then if we do flip bullish on the year, I will be looking to buy even more, and that way I've been building and down cost averaging down into here, because you don't know for sure if you're going to get this stop on right here, if it's going to play out like that. You don't know. So for comfort value, I like to be building a little bit of a position and then look to add more here and here. So back to HOT. Okay, so it's the same sort of thing, the same principle in theory. Well, we should in theory be creating a small candle here, and in next year, well, in theory we want to see the move next year. We want to see the bullishness next year. The perfect way, I suppose, would be to create a bullish stop hunt this year. Now somewhere down in here can be a very, 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 very good place to be buying, right? We don't know if we're going to get that though, right? But I would say that stop hunting this large red year, you're asking me, let's go back, how low they can go and where to accumulate in this structure, in such structure. Well, I mean, ideally it would be below this red candle, right? That's ideally. You don't always get it, but that's the ideal place. So that's what I'm saying. If you do get the opportunity to be buying down here below, you don't even have to go crazy and buy loads. The best situations are what I just showed you. It's when you get the low next year and the new year stop hunting everything, right? That's the best structure. That's the ultimate load up time. Okay, so if this continues to drop down here on the new 6 month, and this is flips red on the year, well, that can be a very, very good time to be buying below this red candle for your down cost averaging. Now, a couple of things I just want to say here. It can be a little bit dangerous when the price fails to get above this it gets into the apex. Let's look at ADA here. Now, not identical or anything, but look when it failed to get into the apex. When you fall below the white 100 moving average, well, what happened? Well, you drifted lower down here another 50% or whatever that is. Right? There's a 50% drop down to there. Of course, it did go lower, 60%, 70% down to there. So, do we have another 60% downside in this market? Well, I'm not so sure. I don't have a crystal ball, but if you fail to get back above this white 100 moving average, it can be bearish and you can get stuck below the moving averages and you can drop lower. This, however, had room to drop because it could drop into a double bottom. Unfortunately, at this point, HOT does not have that luxury. So if we do drop on a new a new quarter, right? If we do drop, well, yeah, you can see that this can drop. Say if you drop 50% from here, well, a 50% drop from here takes you right back down to here, right? So that is back into the neckline of here. Now, if we do drop down into this neckline, well, that is probably the place to be buying. This, in theory, looks like it needs more of a base. So what I'm saying is, you know, if this does continue to drop down or whatever down into this level, that is a beautiful base, and then you can pop up before actually exploding into a bull market. Now, then you can see a couple of things. Well, you can kind of see that we are forming this sort of structure. You can see the lower highs the whole way, and this becomes a beautiful bullish pattern. These falling, like there's one right there. Look, see the way, maybe it's not identical or anything, but you can kind of see that it is a kind of a falling bullish pattern that creates, look at this head and shoulders. It's a bottoming pattern. It's a giant head and shoulders. Now, do we drop down here and create a head? Right down in here, maybe I should probably draw there, and then you can kind of see you drop down to here, creates a head, and then you pop back up and creates a bit of a shoulder. All the while, you can see that this red 200 moving average will come down into price here. And when we safely get above these moving averages here, then the price can moon. Now look here, you safely got above the red 200 moving average after a long base. Okay, that's what you're kind of looking for. You're looking for the, ideally we want a long base and to safely get above the moving averages. Okay, so we cannot, right now, a move up here is not safely getting above the moving averages because we are probably going to fail here and they're going to drop back down. We need these moving averages to drop lower, closer into price, so we can safely get above them. Okay, and then move off. But messy there, but you get what I'm saying. Now, if we do pop up in here, right, these still need to drop down into price. Right, this still needs to drop down in the price. So if we do move up in here, we still need to consolidate most likely to be able to get above these safely, right, and then move off. So what I'm saying is this base still needs time to build. If this base continues here, well, so be it. You may not have caught that exact bottom, but you can get on board in here, for example. But in the meantime, the second half of the year does look like that we can have some downside. Things can change on a daily basis. Like the Fed could come out and print a whole crap load of money or something that could change things. But in the meantime, this structure to me does not look ready to moon. Okay, it needs some time, and that time is likely to be next year. This sets up perfectly with a new yearly candle, and then we can moon. In the meantime, if we get more downside, well, I absolutely love this level down here. This neckline down into this previous neckline. This is back to the scene of the crime. This is where the market originally broke out from. Right, that's down on here, and it, you know, I may be it's tough to say, but in that sort of ballpark. God, the alerts are going off. I need to go and might try and see if I can find some trades down into these levels. See this green area, this green box here, right down in there. I love this level if we can get down there. Okay. Yeah, I didn't draw that very well. So that's where I really love HOT. Now, last thing I just want to check here. Bloody hell, that really did moon, didn't it? You want to check, right? So we're already down 95%. Many altcoins last season dropped 97, 98%, 95. Yeah, look at this. This would be 96, 97% down. Yeah, I really do love this level down here. One thing I want to show you here. Now, if you look at this base here, you know, the big drop, the big moon up here, the big drop, the below the moving averages, the stuck below it, creating the base. Now, if we look at XEM here, last bear market, you can kind of see that we did form a base here for a long period of time, and then we ended up going lower. That was, you can see there, that's November. That's in the second half of the year, and we roll over to new lows. Now then, from there, we did bounce. But here again, right, look, when we fell below the white 100 moving average, we continued to drop lower. But also, a couple of other things. Look at how we created this downward, almost an apex. It's not a, well, this is your classic apex. Look where we come into. This is into an apex right here. This is a beautiful, beautiful apex right here. Now you can see the moving average had to drop down into price back in 2020, well, 2019-18 bear market, but we had to then recapture the white 100 moving average safely. Okay, bouncing up into the white 100 moving average was no good. That failed, and we rolled over. This needed to drop. This moving average needed to drop down into price, and then we needed to break out above them safely. Now, what I'm saying, if I flip back to hot here, you can kind of see that this likely needs to drop back. Now, this is a bounce up into it, but not really. Not really. It is interesting, but it does feel to me that we can continue to create this sort of downward pattern, and then later we will start to moon when we start coming into a daily apex, a real daily apex, somewhere over here at the end of the year or start of next year. Sorry, I said daily apex, a 3-day apex. So where to accumulate? It's a tough question, because this could continue to drift lower and break down. If we don't do that, you will get opportunities later to be buying. If it breaks, it's okay to buy a small bit here, but be prepared to add lower is all I'm saying. But you can also add later when we start to form these daily 3-day apexes. And I love the level down here. If we continue to drop on a new 6 month, this is where I would prefer to be accumulating, down close to this level here, where the red 200 moving average was somewhere down in here, right? I love that level.